Good morning, traders. It is 8:01 a.m. Chicago time, 9:01 Eastern. I sound like a broken record every morning. Um, it is Thursday, the 9th of February, 2017. Thanks for joining me as always. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The key market sectors that I'm monitoring show that the market is allocating to risk this morning. Please stand by for 1 second. Stand by, please. I just have a risk issue to handle here for one of our traders. Almost there. All right, I apologize for that. Just needed to handle this real quick. Um, the overall sentiment in the market is towards risk. Um, we're seeing oil leading the pack here, up 70 cents at $43. That's 1.3%. We're seeing the bonds lagging down 19 ticks, followed by the Japanese yen, the 10-year note, and the Euro FX. The equity indices um, are all positive this morning. We're seeing a gap up above yesterday's range with the overnight high at 22.96 and a quarter, which is the top here, which is right up against one tick short of the all-time high in this product. So overall, the market is definitely um, strong this morning. As far as news and news and drivers in the overnight news feed, seeing seeing that the Bank of Japan's governor saying the economy still needs monetary support as momentum towards price target not yet sufficiently firm, so Japan's holding firm to its QE program. And then, in addition to that, this morning we got the initial claims numbers that came in fairly strong, 234,000 versus 249,000. Remember, lower is better. The lower the number of people making jobless claims, the better it is for employment. Continuing claims, 2.08 million, slightly higher than 2.06. Initial claims matches the lowest level since 1973. 1973. That's a long time. So, what is that? Almost 44 years, right? Um, and that's about it. As far as what we're expecting moving ahead here, we're looking for Fed Speaker Bullard to speak in St. Louis. We're looking for wholesale inventories at 10 o'clock Eastern. Bullard is speaking in about 4 minutes. U.S. wholesale inventories for December expected at 1% at 10 o'clock Eastern. Wholesale sales, no prediction. The prior 0.4%. We get EIA natural gas at 10:30 Eastern. Then at 1:10 p.m. Eastern, we get Fed Speaker Evans, and at 1:30 we get BOE speaker Carney in London, and that's what's on deck today. Let's switch gears real quick here and get to what we expected yesterday. Here's what the primary plan was, and I really, really urge you to watch yesterday's Trader Bite, not because it was absolutely fantastically right or anything like that. It was not. The primary hypothesis did not end up working out as beautiful as that setup was. The market is just too strong to take on an afternoon selling spree. So, but yesterday, it was a little bit, it was a longer than normal trader bite at 18 minutes. But I go through we're, how I'm pushing to convey to you all the idea of moving from just having a plan or the context to formulating a trade, and then of course I have other videos out there that talk about how then you stock the trade. The order flow video that was released a couple of weeks ago that is available on my website and on on my website shows you how to move from formulating a trade like you see here. This trade, this primary idea yesterday had a 2 points of risk for an 8-point potential target at 81.50, and or not 81.50, but all the way down to 22.79. And you can the remaining part of this trade is to stock and find out what the market wants to do once it's open versus your plan, and then taking a trade. The risk is already defined. We've already defined the risk. We've already defined the target. We've looked at what areas we're looking to trade. You know, these are key targets there. Why the trade was created. You have all the components there. Just watch that video again so you understand what I'm going on about. The primary hypothesis did not work. What ended up happening is we ended up trading down here for far too long, testing lower and then pushing back into the range. Remember, the idea yesterday for the primary hypothesis to work is to push higher early. We want to see it push higher early and find sellers as opposed to pushing lower early, finding buyers, and then the market rotating its position to the buy side, which is what Hypo 2 was, and Hypo 2 was on the nose. So remember these prices, 81.50 yesterday. 81.50 was expected to be the base of the pullback. If we did sell off on the open, the base of the pullback is expected to be at 81.50. Then I'm looking for a corrective pullback, and then I'm looking for a push to the lower end of the range and value low, which was at approximately 22.86 or so, and then a push towards at least 22.88 and a quarter. So these are the key scale out areas if you got in. Let's look at what actually happened once the market opened. Again, this is pre-open. This was absolutely on the money. Again, it's not always the case, but the idea behind the plan was very clear to you, hopefully. Here's what happened. So we had a choppy open. We had a push lower. 81.50 was our expected low. If you're not watching this in 1080p, switch on YouTube to 1080p so you can see the prices that I'm talking about, so you can get it in high definition. But 21.80.50 is the mid of the gap right here. That's this price right there. The market pushed through by 2 ticks, pushed to value low. There's value low, right? There's a value low. That's a slanted line. There's a value low. Boom. Yep, that's a straight line. Value low. Now you get the pullback to the mid, right? That's your potential test point, potential point to step in. This is your corrective move right here. This is the low, and then boom, push right into the prior day's point of control. 22.8875 versus 22.88 and a quarter expected. pulls back to the prior day's low here, the green line, and then pushes through to the low volume node, which was not expected. That's just icing on the cake when that happens. It pushes right through to the LVN, and then we end up with a point of control right up at the LVN zone, the low volume zone here, and the market is back into the balance zone. So compare that with the plan, right? What we did versus what was planned. It was all prices were hit pretty much by a tick or two, right on the money. I'm not saying that as an advertisement. I'm giving you a real world view of how having a plan pre-market, creating multiple ideas, hypotheses, a key trade of the day, the big trade of the day, whatever you want to call it, creating that and then waiting for the market to play it out allows you to get in with clear defined risk, and have a strong hand in the market so that you're not shaken out by a two ticks or four ticks of heat. You're able to hang in there, as the plan is not violated. This plan would have been violated had we pushed up, pulled back down, chopped around, and then continued lower. Now you know you're wrong on Hypo 2, and you need to step out of the way, and that's a loss. Losses are just part of the process here. So I encourage you to watch that video again and then compare it to what actually happened on the day, so that you can see that there are no secrets here. There's no secret sauce. There's not some black box or some special system, and that discretionary trading, it does work. People just kind of put it down that you should move into systematic trading and so on, which fine if that's what suits you. You're dealing with issues as far as execution and so forth. You probably should move towards more of a systematic or programmatic trading. But overall, the traditional auction process, the traditional part of managing the trade, which is how I trade, has been here for 1,000 years probably, and it continues to be here. Well, we didn't have technical analysis 1,000 years ago, but you know what I'm saying. It's not something to be dismissed. As I move forward here into yesterday's, watch this profile that's sitting on the side. This is what's called a microcomposite. As I watch what happened yesterday, as I move forward and I add the volume that's coming in, so you could see how much sharper that point of control on this profile is becoming, but we still have a double distribution. We still have a double distribution with a point of control down at 2288. 2288 is likely to be a base. If the market pushes down in here, 2288 is likely to act as support for a continuation higher, potentially. But what we've done here yesterday is we tested below these last few days ranges. We tested below. We found buyers. We have a small taper on the profile. We found buyers, and we're pushing back in, and then we got the continuation. The continuation makes sense. The continuation should have been something you would have predicted on the overnight. Why? Because of the way this profile is built. You have energy. You have the point of control near the top of the profile. And that energy is likely to dissipate in the direction of the market. This auction essentially was pushing for a trend up and got interrupted by the fact that the equities closed at 4 Eastern yesterday. And generally, we carry that trade over. We carry that momentum over into the Asian and European sessions. Let's look at what we did overnight. So that's the summary of yesterday. Let's look at what we did overnight. Overnight, we have we reopen. We're pretty much dead in the water through most of the Asian session. We push higher on the European session. We have a very large move up in Europe. I'm not sure what the cause there is. I didn't investigate that. Looks like it was this looks like a 5 o'clock move. Yeah, I don't see anything on my news feed. There's got to be something there. But the market continued higher as we would expect on that profile from yesterday, as we discussed. This is an impulsive move that is digging pretty deep. Here's the mid of the overnight session, and we're resting at the mid. The mid needs to hold here for buyers to continue higher. And for us to get the continuation trade, it stopped just a tick below the all-time high, and we're stuck here at 2292.50, about 4 points below the high, with the point of control underneath. The profile in the overnight session is does not have any consensus at all. If you look at this profile, it is not your typical Gaussian histogram. It is battling at every price. This says that there's no consensus on value, and the market's likely to continue to explore pretty aggressively into the session this morning. So be aware of that the market did not reach balance overnight, and it's likely to seek it on the open. Real quick before I get into the hypos, I want you to see and remember what has happened for the week. This is Thursday, and so we want to see what the week has accomplished so far, and what we have. I've split this weekly profile into days, and you can see the half-hour bars and what has been accomplished. So Monday came in, we traded the gold. Tuesday we have the purple, we tested higher and fell back into balance. Wednesday we tested lower and fell back into balance. So overall we're still stuck in this balance zone. You can see the profile for the week. The point of control is 2288 and a quarter. Again, another reason why we're likely to hold those prices once we test them. I believe that if any pullback into 2288 and a quarter is an opportunity for at least a short-term buy, for the bounce on the first touch. So overall for the week, we haven't really pushed very much. We haven't gone in any direction, but there's a lot of fuel here. There's some pretty good fuel here. We're in alignment with the prior balance, and the market wants to continue higher. It looks like it's just unable to sustain lower prices at this point. Okay, so let's move on to our hypotheses. Okay, our plan for the day. Given where we are now, we're inside of the major balance on the high extreme. We have yesterday's range below us, so responsive would be below us. The primary idea, if we open here in the next 10 minutes or so, the primary idea is a small attempt at choppy move lower into the prior day's range. I'm looking for it to base around the 2290 area or so, and then I'm looking for it to start pushing higher. We have sold off. Note that we have sold off every time we've come up here. So I'm expecting that to happen here again, but I also am expecting a pretty good base for the market to lean up against and to gather up the energy it needs to likely push up. I'm looking for the market to push up to 22.95 initially, and then to squeeze through this high and go and give us the 2300 that a lot of people are waiting for. 2300 is a century strike price. In options, it's a century figure and a big target up top. This is the primary hypothesis and the natural progression of the auction as we push higher into push higher back into balance and have looks like we've completed testing the lower side of balance. We're leaving a gap zone behind. So if I turn on my flex levels, you can see that we've left a gap zone behind. Still, we tested the mid of it before buyers stepped in. So there's a fair amount of strength here. I expect it to resolve to the upside. That's hypo 1 for you. Secondary hypo, we open aggressive. We start to push up. We continue higher into the overnight high. We push higher, and then we start to we get to the 2300 area again, or thereabouts, potentially poke through by a point or two, and then likely to fall back in and then just sit sideways for the rest of the session once that energy has been expended. That's the secondary expectation. Either way, I'm looking for higher. The tertiary or the third hypothesis is one that repeats what we saw here and here, which is to open up, make an attempt higher, fail, get back into the range, fail to get out of the range, so hold yesterday's high, and then move back down to 2288 where I expect support to be on the first touch. That is your third hypothesis today. Of course, Hypo 3 gives us the better trade, the faster results, but the market has not been honoring those sell-offs, at least for the last couple of years. So we'll see how that works out. But these are the three main ideas. The last thing I want to leave you with is I did a talk about risk, understanding price risk versus information risk. Now that sounds like a very academic thing, and it sounds like theory, but I urge you to click on the link in the description of this broadcast here. Just hit your YouTube link down below, and there's a recording. It was sponsored by Futures.io, and it's a talk about looking at risk. Risk is not just risk. Risk is broken down into types of risk, and your job as a trader to balance information versus price risk. And it's really important for people to start to understand that as part of their process. Okay, so I made the point pretty well in this one. Just grab the video and listen to it. We kept it to an hour. Just listen to it. I think it's really important for you to understand the different types of risk you're taking on a daily basis and what works for you and what the advantages, the pros and cons are for information versus price risk. Have a look at that. Good luck today, and I'll catch you tomorrow. Take care.